Hello people, hope you're good. Just a quick video today on how I pick my companies. So we've been talking a lot about looking for a company that has a good solid short-term growth, but also has a solid long-term futures. You don't want something that's really erratic. You want something with quite a stable upwards line over the last few years, or something that is particularly of a low price at the moment compared to its history. For varying reasons, obviously at the moment there's coronavirus pandemic. There's a lot of companies which are selling for half of their usual price, a third of their usual price, which are pretty solid companies that you know are going to go up once it ends. But there's always other options. You can't rely on the pandemics to give you good options all the time. So if you come in here, you can see in the Etoro list you've got a few options. So you've got the news feed, shows you what people are talking about, shows you what's happening. You can search different options, different stories. You have this little E in the top right that gives you a few notifications about what's happening, who's doing what, who's bought what. And also we have in here, you can see copy people. It's quite an interesting option on eToro. You can just see who's got the most interest, who's made the most, who has the most followers, things like that. Let's go for this guy at the top, Jep. I'm going to go to this little pie chart on the right to see his portfolio. So I assume he's from Sweden. He's bought Swedish biotech company, Amazon, Nintendo, lots of companies anyway. So you can pick any of these and take them to Google News, look them up on Motley Fool, cross them across a few different resources, see what comes back. So because I think I know the reasoning, I'm going to go for Nintendo. So let's open Nintendo. So you can see he's bought a few Nintendo shares over this year. 4 separate occasions he's bought Nintendo shares. So we'll take Nintendo, we'll go to Google News, Nintendo stock. Motley Fool, first article. Nintendo stock has doubled since the game switch system. So you see it gives you straight away a good article on the stock. Big sales of the Nintendo Switch. Also, Nintendo, I believe, have a new theme park opening, or a new section in one of the Disney theme parks. So Nintendo's got a lot of growth at the moment. If you go Nintendo theme park, Super Nintendo World. So yeah, I think Nintendo could be a good one for the future. New theme park in 2021. Successful games console in Nintendo Switch. Doubled in number over the last year. I think Nintendo's going to be a good one to buy. So straight away there's one of the ways that I pick options. Another way, if you go to plus 500, you see it's got different tools. It's got different ways of doing it. So we go instrument categories. Popular instruments, what's been buying and selling a lot today? What's been buying and selling? What's been buying and selling? Tesla, UK 100, oil, OPEC deal coming through today, OPEC talk. So again, we could take any of those, put them to Google News, search their name plus stock, see what comes up, see what people are talking about, and then make your decisions based on that. Don't just take one news article and follow their decision. Get multiple sources and make your own decision based on that. Don't just look at these videos and look at my tips and click buy, because you might be buying on the wrong day. You got to do your research further than that. Look into it much deeper and you'll make better purchases. Compare multiple opinions and form one of your own. You'll do much better. So at the end of the day, these professionals giving advice, they're only human. They make mistakes too, so it's good to cross-check people's opinions. If they all come back as being good, then you're onto a winner. So the other category you can go to is risers and fallers. So this is the things that have been up the most and down the most this last day. Zscaler is a good one. I believe I've got that on my eToro. Oil, I've got that on my eToro as well. So let's see what's been doing badly. Splunk, Cinemark, Cineworld, Yeah, so there's been some big movement. So let's take Splunk for instance, for that drop recently, huge drop recently. So we'll go to Google now. With Google, Splunk. So they missed their quarterly results earnings. Yeah, they missed the estimate that they made on their earnings. But Splunk, again, I think it's a technology company. Let's find an article that's not an advert. So yeah, fourth quarter revenue outlook expectations were not met. 11% lower than expected on revenue. Shares outstanding, 165 million. So yeah, I mean, you know, if you believe that one bad quarter is going to ruin this company, then I would have to disagree. Because I think it's a software company. Software's a growing market. So yeah, so one of the ways we look into it. Again, that's just don't base on what I'm talking on Splunk. I'm just literally doing this live. I've not looked at it before. But yeah, that's just a quick way that I would choose to buy some things. So if I look at something and it's really, really down, I think, is that going to recover or is it going to stay down? I mean, Splunk has dropped so much, even if it doesn't go back to its original price, even if it only comes back to around 182, well then, you know, you're up a lot of money. If you bought when it was at 203, you're down a lot of money. But if you buy at the bottom of that drop, I mean, if I bought at the bottom of the drop at 154, I would already be up. But yeah, the other ones you can do is if you look for companies that have made a big rise, say this Snowflake, they often have a correction drop. So if you see a big rise, don't think, oh, I've missed it, and try and buy in. You know, fear of missing out. Don't let FOMO get you. Watch it and wait for that correction price drop. That's normally where people that have bought in and are making profit will decide to take profit, and it makes it drop back to its actual value. You can see here it dropped back to the value it was a few days previously. So yeah, so if you watch for that, things like that, you know, and then buy in on that correction dip, then again you'll be back up. Whereas if you'd bought at the top on the 3rd of December, then you would have gone down and been back at where you started. If you'd bought the same day but later on in the day, midday, 1 p.m, then yeah, you'd be up a good few pounds per share by now, £10 a share. So, you know, if you see something shoot up, watch for that correction dip. If you see something shoot down, look for its recovery where investors notice it's cheap and snap up that stock. Prime example would be Cineworld. If you look at how low Cineworld was, and then all of a sudden, when it got cheap enough, investors came in and bought it out and saved it. I had some stock in there. I still have some stock in there today. Cineworld's not doing so well today, I don't believe. But, you know, other days it's been doing well. If you bought in recently, you're not doing so good since today. It was 7.37% down. But if you had bought on, what was that, 30th of November, you would still be up, even with today's drop. If you bought on the 27th, you would be really up. And you see there on around the 26th, that'll be around the time that the buyout deal was going through. When it was confirmed, it shot up again. Steady rise. We'll have to look into why this drop is. This will be the last one, so let's have a quick look. Let's go Cineworld stock. Again, don't just use Google News. I like to use Motley Fool, which often comes up. So the price doubled in November. Can it go higher? So I believe that this little drop, it seems to be that it's just people cashing in on their profits. They've doubled their money in November They're cashing in on their profits, which is making a little correction drop like we were just speaking about, and then it'll probably continue to rise. I mean, it was formerly trading for over £600 a share. If we zoom right out, so you can see even back in 2013 it was still around 185, 190 a share, and that was at its lowest point in the last 8 years. So once this virus gets more under control and cinemas can open, I believe it's definitely going to hit at least 288. Looking at that line, it could go as high as 480, 500, even above and beyond the share price it once was. So Cineworld is definitely one of those 10% of your stock that can be a bit of a risk, high reward, high risk. If you've got 90% of your money invested in good solid short-term buys with good solid long-term futures, then you can afford to put a little bit of your balance, a little bit of your equity into something like this, a high risk, high reward strategy. But yeah, I hope you enjoyed the video. Let me know in the comments or in the messages if there's anything that you want me to cover. Yeah, it wasn't my intention to start these videos. I just had so many people asking for advice. It was eating up so much time. I figure if we put it on one space on YouTube, people can go and have a look. I do the videos one take. I don't stop and edit anything, so sorry if they're not smooth as you'd like, or there's a bit of a stutter in or a bit of a mistake. I do try and just do all these videos one take, no editing. So it doesn't always go to plan. Sometimes we have to stop and start a couple times, but usually once we get the flow, I'll just record all these videos one take. So yeah, I hope you're enjoying them. Let me know if there's anything you'd like to see, and please hit subscribe.